Hey everyone, this is the Trader Investor. In this video we're going to continue to go through SPY. Specifically today we blew through a couple of demand zones, and I want to explain to you why we went through these demand zones. And as always I say, do not trade blindly into these zones, right? Always have some confirmation, and confirmation will come through some candlestick pattern or through some chart pattern or through some break of structure. What is break of structure? We have a downtrend and we have a reversal, and the reversal, when price starts to make higher highs and higher lows, that is break of structure. And same thing for the opposite. We have an uptrend and we reverse course and we make lower highs and lower lows, that is break of structure. So you want to have one of the three ways to confirm: candlestick pattern, chart pattern, or some sort of a break of structure. And candlestick pattern is easy to identify. All you have to do is have a chart next to you. I have a chart right next to me that says, hey, if I have this, it means bearish. If I have that, it's bullish. So have some chart like that. And then the chart pattern could be a formation of a flag, of a pennant, of a wedge, of a megaphone, double bottom, double tops, triple bottoms, triple tops, head and shoulder, or the reverse, and so on. So have some sort of confirmation. So enough said about confirmation. So yesterday and the day before, we went to a demand zone, right? We had a demand zone from last week, from 2 weeks ago actually. And we had a demand zone that we went to on Tuesday, and price reversed there. So we on a 1 hour chart, we had a price that went there, reversed, and did not close below it, and then we formed an inside bullish bar, and then price went up from there. Now as price kept pushing up, it failed to make a new high, right? It failed to break the high of Tuesday. Even on Wednesday, it failed to break the high of Tuesday. So we're starting to see a high, a lower high, even a lower high, a low, a lower low, even a lower low, right? This is what I mean by break of structure. When you have an upward structure and that structure breaks to the downside, and you break this lows a couple of times, right? You break it here, reverse, fail to make a higher high, and then you break these lows again. That tells you, okay, price is pushing down. So as we've talked about now, the break of structure piece and confirmation, when price comes to our area of value, which in this case is that 1 hour demand zone, price reversed. And then it came back again. And what did I say the last couple of videos? If there is outstanding orders, that's why it's called a demand zone. If in that zone we have additional orders to the buy side, significantly large enough orders, it will pick up those orders and it will reverse course. If all the orders were fulfilled, and when we're making a lower high, and when the low of this wick that went into the demand zone just barely went into that zone, I'm cautious. I'm cautious because it says, oh, there were no selling pressures, and for one, the institutions did not have significant orders below this value, therefore they did not have a need to push it lower, and it immediately reversed within that same hour. So that's why I'm a little bit cautious. And so when we fail to make a higher high and we make a lower high, then I'm very cautious when we come to that area. So yesterday after FOMC, we blew through that zone and we stopped at the second zone that we identified. So since we blew through that zone, I no longer need this zone, right? We went to it once and we never stayed there and reversed because we went through the second zone. In the second zone, did we have a reversal? Well, today we gapped down, meaning we blew right through it. Again, what does that tell me? There was no orders from way back here. There were no additional orders here to reverse that position. It might appear to you that, you know, after this close here today price went up, but if you look at this bar, this is a bullish bar. That's, for me, solid bars are bullish and hollow bars are bearish, and so you know it started way down here, so we know we blew through this demand zone, so there was no reversal signal. And so again, because we blew through it, this is no longer necessary or important to me. Now we come to this zone. This is an order block. This could be also a demand zone. Order blocks and demand zones are similar, but not all order blocks are demand zones or vice versa. So we can see here we have an order block here, which is also a demand zone because price pulled back and failed to continue further, and it made this big wicks, and so usually these big wicks are good demand zones. And then the last bearish bar before an upward move is an order block from the open of that bearish bar to the low of that bearish bar wick. So because we have this zone, and now when price comes here, now we wait and get for confirmation. Just because we opened here and start to push up doesn't mean it's necessarily a buy zone. It happened to be a buy zone today, but we wait for confirmation. And so today we came into this zone, and there were a lot of orders to buy here. So this demand zone was very strong. This order block was very strong. They have mitigated this downside move before they push the price up. Remember, an order block is the last bearish move before they take the price up, and they leave this bearish position open. It is losing. So all this way it has been losing, but they know they're going to come back and mitigate that loss. And when price comes all the way down here, boom, they mitigated that loss, and now they can enter additional positions. And any positions that they have left open here, because they don't want to chase, they don't want to place an order down at the 437.80 area and still continue to buy at the 441 area. They will take as little position as possible before chasing, or as big position as possible before chasing, and then some of those orders were left open, and because they were left open, better filled down here, so that was our reversal. Now let's switch to a 15-minute time frame to see where the reversal is, because where it's important for that reversal is the break of structure. We have a down move, an up move, and then a pullback, and now we have a low here, we have a higher low, and just because we have a higher low and we break these highs, now we're able to enter this position. And usually I say, hey, make sure you get that dollar move from your entry to where you're expecting. So somewhere up here is where I'm expecting for price to stall, $2 move, but it stalled at the low of last week. It's kind of hard to see this red dot, square lines, square dashes, square dots. These lines represent the low of last week, and then the green ones represent the high of last week. So price came to the low of last week and reversed course. So it did give us that dollar move, good enough for us. So this was a beautiful entry. So that's how you will look at break of structure. And because we're looking at the 1 hour chart, I will go down to the 15 minutes to help me pinpoint that break of structure. If we were to just do the 1 hour chart, that break of structure will come a little too late, right? We have this down move up, and then we have this high, this low, and I want to see a break of structure up here. So from a 1 hour perspective, we don't get the break of structure yet. So it will be way up here at the 441.20 area before we get a break of structure. That's why I like to go down to the 15 minutes to pinpoint. The other thing you can do is you can do chart analysis and look at candlesticks. You have an inside bar, and at the break of the high of that inside bar, because it's a heavy reversal, right? price came down, and then boom, it reversed. So you can take the break of this high 439.70 area for that break of structure. This will coincide with your 15-minute break of structure, because what you want to see, 439.98, so roughly that area there that we see now. It's a little bit lower on the hourly chart because that next hour bar, this is that inside bar here. So somewhere between 439.65 to 439.95 to 440 area, it was your entry for that dollar move. So either way, you could have taken the trade even without going down to the 15-minute chart. But the most important thing today, the lesson was, why did we not stop at 2 demand zones? Is because there was no demand there. There was no demand up here, and there was no further demand when we got to that price, and there was no demand once we got to the next area. And when we got to this major area of an order block on an hourly basis, this was our major order block where price pulled back and took off from there. So this was a good area for price to mitigate this short position. Once it's mitigated and price is reversing. We have yet to see what's going to happen tomorrow. That's why in this kind of scenarios, I don't like to hold positions. We're too close to the highs for me to take a position overnight. It was different in this scenario because we were way down here and we have quite a lot of room before we got to the highs. So I want to see that kind of a position. If not, just everyday play it safe, and you have your positions. And now what do I have? Because we're making lower highs, I have a 1 hour supply zone here. So now I'm cautious. Trade with the trend. Don't forget that. Trade with the trend. So when you're looking at the daily, our overall trend is upwards while we're taking some pullbacks along the way. So we're in a pullback zone. And so when we come to a supply zone, what I want to see is this a strong supply zone where price reverses, or does it just slide through it, use it as support, and continue to the next one? So I just mark it to be cautious. If we do take a position and we come to here, maybe we take 50% of the position off, because it's a supply zone, lower high supply zone. This is a high, all-time high supply zone. So be mindful when you're getting to those all-time highs, like in this area here. When you're getting to all-time highs, price could take a while to break out, and then we get to these highs. It took a while the same day, right? Tried, even went down the following Monday and pushed up, but then we're continuing to go down. So it might take a while to go through these highs. Just be mindful of that. So really the focus today was on the SPYs. Why did we go through demand zones and not reverse? And you know the reason, there was no open orders. That's why we wait for confirmation. What is confirmation again? Confirmation is in a downtrend, price starts to make higher highs and higher lows. This is our confirmation that this structure is broken. If we are in a downtrend and we have a rally that continues a downtrend, there is no broken structure, there is no entry for us. Actually, what this gives us is an entry to the downside. A bullish rally gives us a bearish entry to the downside, as long as we know that this is an area of resistance and we come into that area of resistance and boom, we go down. Alright everyone, this has been a fun video to make, and I wanted to wait until the end of the day to really show you what happens when we are at a significant demand zone and an insignificant demand zone. Insignificant meaning there was no more orders. We identified them, Nobody's telling us there's orders there. We identify them. That's a potential area. For whatever reason, those orders could have been there yesterday and removed today. They could have never been there, and supplies will slice through. So that's why we wait for confirmation and we don't enter those positions there. Take care for now, and I'll see you in the next video.